That's right,
Yeah.
Charlie. And
Yeah.
today we're doing this podcast video on the 3rd of April, and
Hmm.
so the market's bound down pretty big today
Hmm.
as we talk. And anyway, I just wanted to timestamp that, and that
Yeah.
might influence some of the things that we talk about.
What I love to do during these times is revisit, how we should be thinking and not should be, right? How we might be thinking that can help us get through these things. And it's not easy, that's for sure. We realize it's a challenge. And so we want to try to help kind of have the right frame of reference.
I am very lucky that I started in this business in 2007. And the reason I say I'm very lucky is I went through 2008, I went through 2009. I needed to figure out how to survive. They said that financial planners had a very high rate of post-traumatic stress or whatever they call it after the crash of 2008. Now this type of lucky, this is like my friend Rob, who was talking into a fan at college, and he got so close to the fan that it just slit his nose, right down the side of his nose. It slit it, and he had to get stitches. And so I told him, man, you are lucky that
Hmm.
you didn't get your nose chopped off. And he said, look at me, Kevin. Do I look lucky? And so maybe that's the way I feel a little bit about having gone through
Hmm.
that market crash. But Charlie, I really think as investors, human beings, people, we really want to discover a way to be at peace with what comes our way. And I think that's really what our mission today is.
Yeah, absolutely. And I want to talk to, why do we hate uncertainty? It's just one of these things as human beings that we just do not get along with well. And not to mention in the world of finances, there's a lot of confusing information surrounding us, i.e. news headlines constantly, whatever your Google feed might be feeding you. We'll talk about some of those things. But right now, let's just kind of frame where we're at, the state of the markets. We've had a lot of unexpected announcements. Whether they're good or bad, Kevin, we don't know yet. We may not know
Right.
for years. And so we're not obviously going to be political. We'll save those for conversations for other people, but we know that markets don't like surprises in general. In fact, we often say it's not the event itself that affects the market. It is the unexpectedness of it, whether that be good or bad. And right now, since the beginning of the year, there's a lot of unexpected things going on. Mainly, I would say mainly tariffs, some government layoffs, some things like that. So there's a little bit of fear out there, and I think the markets are reacting to those unexpected events anyway. Kevin, anything to add to that?
Yeah, I mean, the market really is an information processing machine. And what I mean by that, Charlie, is people every day are deciding if they want to buy or sell. And less people really want to buy. And today is a day when it looks like most of the people want to sell. Again, there has to be a buyer and a seller
Hmm.
for all transactions. But yeah, that's what we've seen. We've seen the market kind of tell us that people are afraid. And that's the reason why volatility goes up, and that's the reason why the markets have gone down.
Yeah. And volatility and uncertainty. In fact, that risk, we could use the word risk for all that, right?
Hmm.
It's interesting. That is the reason why there's a return in the market in the first place. And sometimes at this very moment in time, that is really hard to process right now. Like these downturns are the reason why there is a positive return over time in the markets. But it is interesting. Right now, as you've said, the markets are reacting. And in fact, who was it? Benjamin Graham said the markets in the short term are like a voting machine. And that's what you're alluding to, where people right now are voting with quite frankly, emotions. We don't know a lot of things. So at this point in time, Kevin, it's fascinating to take an inventory of how we feel about this. And I'll just say that, there's not a lot of sources of information right now, just like in 2020, that you can go to and go, oh, this is what's going to happen. So and so expert's going to tell us what's going to happen. That's just not in existence. It's only in existence after the fact. And at this very moment, there are a lot of uncertainty and there's a lot of uncomfortableness, people looking for solutions, and they're just not there. The future is absolutely unknowable, and we got to get comfortable with that.
Yeah, well, I'm uncomfortable right now, Charlie. I mean, you're uncomfortable. We don't
Yeah.
like when markets go down.
Yeah.
Our clients feel stressed. Everybody feels stressed. And when one question that often gets asked is, is the market more uncertain at certain times than it is at others? And, there's always that risk that's present in stocks, and that's why they've had such high returns, as you've mentioned. It's not a bug in the system when stocks go down. It is a part of the whole reason why expected returns are high, because it's very hard to stay the course when markets go down. And the best time to have been an investor in the last couple of decades was 2009 March. And by the way, the news was so bad in March of 2009. I remember the date when it bottomed. I remember a conversation I had with a client. We still joke about it, but it really was dark. And what also happens now, and this happened a little bit then, but not as much, is that when markets go down, you actually notice all the articles that are coming out that are bad.
Mhm.
Every day, Charlie, we hear from some client that tells us the market is going to crash. They send us an article. It's a doomsayer saying the market's going to crash. But now, when you see that article, boy, it makes you a lot more scared. I mean, have
Yeah.
you had that type of reaction to some of the news you've seen?
Yeah, because like you said, it's now associated with real events and real on your statements or on your screens, you can see your dollars going down, and that's alarming and creates that, flight or fight or flight response in us, right? But Kevin, right now, just to be more specific, we've got tariff wars in the news headlines. We've got dollar crashing in the news headlines, higher inflation, stagflation's always thrown out there, it seems like
Yes.
just about every time. And talk to us about this feeling, when we say, everybody says it's different this time. And it is different this time, and that's kind of what I'm getting at. But tell us more about that as far as how do we handle that feeling? It's different every time.
Well, I mean, COVID is the greatest example of it's different this time.
Mhm.
But what ended up happening is, like every other time, at least in history, we can't say what's going to happen in the future. But companies were making, bleach products and all kinds of stuff, and they figured out a way to make money, although the economy shut down. And we came out of that, and but when the market started going up again, Charlie, COVID was still raging,
Yeah.
and nobody knew when it was going to turn. And so this time is the tariffs and all this other stuff. There's always the old favorites thrown in, as you said, like stagflation and other things. They always get thrown in when markets go down. But it's scary every time.
Yeah.
And if you go back and you look at what happened during certain market events, it's scary.
It is. It is different every time. It feels different. The circumstances are different. The one thing that we can go back though and look at is um, history. Again, all we have, the data, history to learn from. The result usually can turn out, well, so far in our US history anyway, it's turned out okay. Let's just say that. You know what I mean? After you can kind of look at the data and go, recessions have lasted this long in general, market downturns have lasted this long in general, and they've come back. So it feels different every time. The events are different every time. But so far in our market history, it's recovered and come back. We don't know, when if that'll always happen that way, but that's what's happened in the past, and we do have that piece of information, which is helpful sometimes to lean on that because it's all we have.
Yeah, and Charlie, I know we're going to get into the way our brains work, but our
Mhm.
brains sense fear very, very quickly.
Yeah,
Your money, your brain. Jason Swag said it's a millisecond
yeah,
that your mind can go to a dark place, and that's because of our reptilian-like brain that takes over in times of danger. So,
yeah.
like, what are your thoughts about that? And do you have any thoughts on how we might be able to deal with this? If everything does turn out all right, a year,
Mhm.
maybe even next week, you never know with markets, things could reverse next week.
Yeah,
But so we don't want to say it's all doom and gloom, but how do you get through these times of that brain hijacking the rest
yeah.
of it?
Yeah, Kevin, it's interesting because you asked me yesterday about a flying example. And
Yeah.
sometimes the world of flying, people use cheesy analogies like the glide path to retirement, okay,
Yes.
whatever. That's nice
That's
to
one of your
say.
favorites.
Yeah, one of my favorites. But what I really do believe is that the world of flying, whether that be military, airlines, whatever, and the world of investing steal from each other. And what I
Hmm.
mean by that is, for example, risk management. In the world of flying, risk management is a big deal, and you talk about it a lot. In fact, audience will probably laugh a little bit, but we have the risk uh, RRM model, and I've almost forgotten the acronym by now, Kevin. But
Yeah,
risk
yeah.
reward model, I believe. I don't know, but it's really, if you change a couple words, it's the same thing. And you asked me yesterday about a good scenario or situation, and it always reminded me of flying into Chicago Midway at night. You're 100 miles out, you're trying to get weather information. Maybe it's snowing, maybe it's windy. Chicago Midway, for those of you that don't know, is a short runway. Very unpredictable winds coming off the lakes there, and changing conditions really quickly. But when we first started talking about that, I was like, but pilots they're trained for that. They can deal with being comfortable with that uncertainty and knowing that when you get that ATIS information or when you get some other information, it may not be accurate and it may change. It probably will change and it might be worse when you get there.
Hmm.
But I believe, and here's where I think the lessons learned can transfer. As a pilot, you're trained for that. You talk about it a lot. You're used to it. You have experience with it. And I think that's why pilots can become comfortable in that situation where there's unexpectedness, unknown, uncertainty, and actually be comfortable in that and make good decisions. And I think that's something we can learn, Kevin, as investors, but it does take some work. I mean, how do we train? How do we, as investors, how the heck do we do that? You know what I mean? So that's one thing I think that kind of resonated with me as far as the transferable skills, if you will.
Other than just saying, "Hey, stay in your seat, don't sell," is
Mhm.
is there anything else people can do at this point? I mean, is selling a little an option at this point? The market is down more than 10%, Charlie, and
Mhm.
I think reframing the thought process in our mind is actually, like I believe in saying positive things to ourselves when things go bad. I
Yeah.
think we have to do that. Believing as if everything will turn out all right. I think that's a good thing. I mean, you always have the choice when markets start going down and when the doomsayers come, is
Mhm.
that you can say, yes, this time is different. Or you can say, look, I'm going to believe that everything's going to be okay. You check out your portfolio, you see that you're
Mhm.
really very well diversified. Some of the things that we used to hate owning, like
Mhm.
bonds, they're up a little bit this year. And if you have 8,000 companies, Charlie, what's the chance that 8,000 companies are going to go bankrupt? And if
Yeah.
they do, we got bigger problems. But
Right.
so that's really the benefit again of diversification and owning a lot of companies. And that's what we believe in. And that's why I think our framing of the thought process here is that we're going to be okay when we go
Mhm.
through these types of events.
Yeah. I love the word you use there. And it's belief. We really have to have this basic belief that, again, if you own hundreds, maybe even thousands of great companies, that the vast majority of them will survive. They will come back. They will be okay. And you own parts of them, even though their prices are down at these moments in time for whatever reason. Those are companies that you want to own. And it does take a little bit of faith and belief, at certain times like these, maybe. So it is pretty interesting. And, and so that's when, you alluded to the lizard brain earlier, because a lot of times there was an example. I was reading someone that talked about they were teaching their daughter to swim underwater, maybe across the pool. And that's a scary thing where your lizard brain is going to send a signal saying you're going to drown. Like when there's no other evidence against it, like even in the market, sometimes there's no other evidence that it's going to recover. It possibly could
Mhm.
continue going down, but the lizard brain is loud, Kevin. In fact, the story that this guy was like, I was telling my daughter, you're going to swim underwater the whole way, and about halfway there, you're going to hear a voice in your head that says, "Stop! You're going to die. You're going to drown." And just continue through that voice, right? And our brains are meant to be wired that, or they're worked that way. And so it was so funny because his daughter made it to the other side of the pool underwater. And he said, "Hey, how did you do it? And how did it go?" And she said, "Man, that lizard is loud." So it's kind of, right now, that lizard brain of ours it might be really loud, and sometimes we got to press through that, based on our plan and our perspective and the things that, we've talked about.